Today we are going to analyze one of the favorite stocks of Warren Buffett that has Berkshire Hathaway been buying for a long time, and this stock is OXY, Occidental Petroleum, ticker symbol OXY. And if you would like to start investing, feel free to check out the link in the description, and by this you can register to eToro and open an account very quickly and help my journey with YouTube also. So today we are going to see why have Berkshire Hathaway have been increasing their position in Occidental Petroleum Corporation. And as you can see in their recent 13F filings, they have also increased their ownership in the company. This means that the total 5% of their portfolio is OXY, and you can see the growth in the recent Q, and also that they are owning 27.30% of the shares outstanding. So they have a huge position into the company, and this means that Berkshire Hathaway is going long with this company and they are looking for a long-term investment. So if we would like to get an understanding on how is the stock recently have been doing, we can see that year to date it has a negative position. Well, this can mean that you can also purchase a lower price than maybe Warren Buffett is recently buying. So this can be something interesting. As you can see, the company is paying out dividends. As you can know, in the 2020s, it has been suffering a little bit like all of the oil manufacturer and other companies. So if we want to take a deep dive into their financial statements, we are going to use Y-Sheets tools, which you can also find it in the description, and you can get a discount. So feel free to check out. They have amazing tools that you can use so that your analyzing will be much better. So I just put the ticker symbol up above and it will load all the data. As you can see, the company has been steadily growing in their gross margins. If we look at from the 2020s, where their margin has shrinked, but they were still they have still a very healthy gross margin, which will end up with nice profits at the end, with a net margin of 13 or 17% trailing months. So if we just currently see these numbers, we can see that the company is profitable. I would say highly profitable due to their industry, and also the company is generating a very nice free cash flow, which can mean that we can make a discounted cash flow more easier and forecast it for the longer run. If we want to check the current valuation of the company, we can use the price to earnings ratio, which is about 14.8% right now. Sorry, 14.73% now, and the forward is 14.85. So it's gonna increase if we look at the current data right now, so that can also obviously change. The company has a total debt of $20 billion, almost $21 billion, and the cash position of almost $2 million. If we are going to look at their cash flow statements, which is super important, as you can know, the cash flow, the free cash flow is calculated out of cash from operations minus capital expenditures. You can see that the company has been pumping up their capex, and this can mean that they are investing more of their generated cash into finding new oil fields or developing new ideas in the company. So this can be a good sign of for a long-term investor like Berkshire Hathaway is. For example, that they can find new ways of make money. And also we can see that the cash from operations have been gone back up to the healthy levels. Current year is a little bit lacking behind. That's why you can see that the stock price has been decreasing year to date. But I guess this is normal on the consumer reaction, and as interest will decline, maybe these will be back in a little bit more healthy position. But if we check what is happening with the common shares buyback, we can also see that the company has slowly decreased the number of shares that they're purchasing back, but it's still a very nice number. And especially if we look at the past 2 years, there has been significant share buybacks, which can be good for shareholders on the long run. So in general, as I said on the dividends, there is a negative dividends in the 5-year growth rate percentage-wise. It's because in 2020 they have decreased it, but slowly they have been building a momentum for it, and as you can see, they have been increasing their dividends with a double-digit number, which is extremely good also for dividend holders. And as you can see, that their current dividend yield is around 1.3% and the forward is 1.5, so they are going to increase the dividend, and the current payout ratio is 22%, which is also on a very, very healthy level with the company. Right. So if we see in general, we can see a very nice profitable company. Most of the analysts are waiting for the share price to be around the 70s-ish. So currently it is about the 56-ish area, which means that there is a little bit room to grow in terms of their share price. This is what analysts are saying. And if we want to take a picture on what is their stock actually doing against the S&P 500, because it's very important to check our investments against a benchmark, and this can be the Dow, this can be anything else, but I'm gonna use the S&P 500. There you can see that their total return versus total return in a year basis is negative against the S&P 500, but if we look at the 5-year scope, we can see that there are times when consumer spendings are higher that they can also go with the same level. But if we look at the 10 years, you can also see a wider gap. This is one of the main reasons I'm not purchasing any oil-related companies in my portfolio. But of course, for some investors, the dividends is super, super important. And I just want to make a point that, as you can see, as Berkshire is decreasing some of their Chevron shares, they are increasing their Occidental Petroleum shares. This could mean a little reallocation in the portfolio, as Occidental Petroleum is about 53 billion market cap, and where Chevron is about 250 billion market cap. So we can see that Berkshire is not really heavily purchasing in. Of course, in their portfolio-wise, it's quite heavily purchasing in. But we can see a definite reallocation in the portfolio to something that can have more growth for the long run. But I think Berkshire is going to buy this stock for a very, very long time. They have a lot of cash. So if there is an opportunity in the market, they can just grab it. Although me, as an individual investor, I prefer not to touch oil stocks. And if you like this video, feel free to check out the previous ones. I really appreciate if you subscribe to the channel. And if you have any opinions, just write it in the comment section. Feel free to let me know anything if you have any questions. See you in the next one. Goodbye.